So at least in the short term, it seems that some folks are souring on tech, but what really has fundamentally changed here? I mean, aside from the interest rate, the trade stuff that we've been dealing with, granted for months, is anything really that different?
Yeah, you're right. I mean, investors are thinking about interest rates, thinking about trade worries, thinking about regulation. But I think what's important is you pull a lens back a little bit here. Let's take a look at the broader picture on how tech has done this year. So the Nasdaq's up, 4 or 5%. S&P and Dow are up 2, 3%. We've had a decent year. But when you actually look at some of the big tech names, Microsoft's up over 20%. You've had Amazon up over 40%, Netflix over 50%, Salesforce 30%. Even Apple, with its more recent hit, is still up over 10% or so this year. So you've actually had a pretty good year. And when you look more closely at, say, the third quarter, how tech did in third quarter on earnings, top line's growing double digits. Earnings was growing north of 20%, beating expectations on the top and bottom line by 8% or so. So it's set up actually a pretty decent, quarter. What I think is really interesting, to get to your question, though, is how has tech done since Labor Day to Halloween? And if you look at that period, tech was down about 10% or so. But what's really interesting is that from Halloween to today, you've seen the stabilization, up 1, 2% or so. So you've gotten some stabilization now in tech, which is setting up well for the next year in IPOs.
So are you basically saying everybody wants a pullback, a buying opportunity until it comes? Is that basically what we're looking at here? I mean, some of the companies, granted, in earnings season didn't do as well as investors had hoped. Apple, Facebook, for example. You're saying put that aside, here's your chance to get in if you couldn't before.
Yeah, well, what's interesting now, if you look where tech is trading right now, it trades around 16 times earnings. Its PEG ratio is about 0.25 to 0.3 or so. EBITDA multiples around 12 or so. So not really expensive. And what's interesting about that, you still have this voracious appetite for investors out there for IPOs. So we've had about 50 or so IPOs already this year in the tech landscape. That's close to the 60 high mark we had back in 2014. We'll see if a couple more done by the end of the year. So I think that sets up well for into 2019. And those IPOs, importantly, are up on average about 30% or north of 30%. So you've had actually a robust alpha-generating IPO market for portfolio managers.
Bob, I've seen a number of notes in the past week or so saying FANG's out, MAGA is in. Microsoft, Amazon, Google, Apple, what do you think?
Yeah, I mean, some of the numbers I pointed to before, I think what you've seen become more interesting is this whole FANG blanket trade. And I know Jim talked about it earlier today, that there's various multiples in that. Apple trades obviously at a very different multiple than where Amazon trades. So it becomes almost more of a stock picker's market. But what's interesting is you're seeing board level discussions on some of these big trends that are taking place. And I think not only is that driving IPOs that are happening, but it's also driving a lot of M&A. So if you look at this year to date for the first 3 quarters, we're up about 40% over last year on M&A dollar volume basis. And if you look at how we set for the rest of the year, we're up over 80% over the last 10-year average and close to the high water marks of 15 and 16. So you're seeing these large themes of machine learning, AI, cybersecurity, fintech, driving a lot of demand from not only portfolio managers, but from board level decisions.
Bob, when it comes to FANG in particular, 3 of the names, you're also hearing a large theme about just their market power lately. I had Makin Del Rahim, of course, who runs antitrust enforcement, on this morning talking about it with me. The president has been tweeting about it, many others, and over in Europe, perhaps an even stronger case being made to some extent. Is that a concern? Is that something you're hearing out there that some investors and or executives are at least focused on?
Very much so. And so I think you're seeing this weigh on some of the stocks out there right now. I think you're also seeing it become a big focus for these companies. So you probably could take an example like Facebook, which to get to where it needs to get to is going to have to become one of the leading AI or machine learning companies out there, and hence all the resources being put into the platform. But just the wielding power, whether known or unknown, is very, very big and very important. I think that's why you've seen publicly these CEOs come out and talk about the importance of having this responsibility as they think about tech and their power going forward.